Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. Our flagship event, the Vancouver Resource Investment Conference, is coming up January 19th and 20th. We're bringing all sorts of incredible keynote speakers to the table. A lot of companies will be there in the junior mining space. You can have a chance to meet the CEOs, ask any questions you might have. The best thing about it is tickets are absolutely free, so be sure to get yours by clicking the link in the description below. And in the meantime, we're bringing the VRIC to you with our series of expert online panels. And today I'm very excited to be joined by Francis Hunt, a technical analyst and the founder of MarketSniper.com and CryptoSniper.com. We're going to be discussing gold, silver, Bitcoin at all-time highs, and a number of other things, including the collapse of the German government, which I'm very excited to get into. Francis, it's great to have you back on the show.
Indeed. We're all so excited about the Germans crashing. Oh, I don't know about that, but yes, they are in trouble, aren't they? And thank you for having me on.
Yes, absolutely. Well, let's get to that in a moment. But first, I want to start by discussing the gold market. We saw quite a run up in gold this year, reaching close to over 2,800 at one point. Now we're back down to 2,600. There's been a bit of a correction. I think this is only natural given how far it ran. Do you think we're in the early stages of a gold bull market here? And how do you see that sector playing out moving forward?
Yes, so people should not be overly fazed by what's going on the 4 hour or the daily chart. I mean, beginning of November, we were at a 2750, 2780, even potential high. And now you had some degree of a pullback. There was a small time frame head and shoulder, but it's only relevant for the time frame for the day traders. This is a secular bull market, and do not be shaken out by occasional corrections. I do also just want to make this small point, Jesse, that will maybe also put a little bit of light on this. We talk about the anti-fiat as a general category in terms of our framing, and gold is the king of the anti-fiats, and it moved first before Bitcoin, which is a subset within the anti-fiats. The Trump trade, Trump has always been very pro the dollar, and recently has pivoted to adding Bitcoin in that. So he's into the digitization system, and he voices, as most people do, very little or no opinion on gold. So being pro-dollar is actually anti-gold, because we know the fiat currency system to be essentially at the tail end of its lifespan. So in essence, the Trump trade was actually short gold. It wasn't short gold, but it was Bitcoin to take over the reins as the key anti-fiat in lieu of gold. So that's why I would imagine a lot more money has been rerouted, and it has always been a separate, and it's been positioned sometimes as a competitor, although I've said generally in the macro they're both positioned as anti-fiats. Bitcoin can be antagonistic if it has to be a bit of a honey badger phase now, and everybody's going to go, oh, crypto, oh, digitization. I think Trump's the president to bring on more of the digital money agenda that I've been suspecting, and the Trump trade is part of bringing on Bitcoin. But initially you get that surge and everyone goes, boo, gold, yay, digital gold. But I don't think that sustains for too much longer, because the central banks have been the primary buyers, and they'll be back in the market as those debt numbers continue to climb for the US, and they'll be aggressive buyers of gold, especially if it comes too much off.
Quick break here, guys. Today's episode is brought to you by Copernico Metals. Now, regular viewers of my channel will be familiar with the entrepreneur behind Copernico. His name is Ivan Bebek. Now, although a young man in this business, Ivan's already created tremendous value for his shareholders in the past, namely with Caden Resources, which he sold to Agnico Eagle, and Keegan Resources, which became a mine now owned by Galliano Gold. Now, Ivan has surrounded himself with expertise from BHP, Newmont, and Barrick on his board at Copernico Metals. Check out copernicometals.com. Now back to the interview.
Well, let's pull on the Bitcoin thread there for a moment, because Bitcoin's at what, 91,000 plus as we sit here right now. It seems to be absolutely on a tear. Trump obviously getting behind the Bitcoin train leading up to the presidency. He appeared at some Bitcoin conferences and was, has said several times, don't worry, nobody's coming for your crypto. I don't think he understands Bitcoin, not even a little bit, but he knows that it's a popular thing to promote. I wonder if, first of all, what are your thoughts on Bitcoin ripping at this point? Do you think we're overbought here? And second, is it a good thing for the government to get involved in Bitcoin? Is it a good thing for BlackRock to have an ETF? When for most Bitcoin maximalists or sound money advocates in the Bitcoin camp, they would rather the government and big institutions keep their hands off this asset. What are your thoughts?
Bitcoin has entirely been co-opted by the institutional BlackRock realm, and it's not a good thing for the liberty side. It's not a good thing for the non-surveillance of your financial matters side. It's not good for any of those aspects. So generally, I've always treated it as an on-ramp for the CBDCs from early on, and I've been expecting this acceptance. It's gone from being this geeks buy drugs, heroin online through, what was it, Pirate Gate or whatever it was called.
Silk Road, yeah.
Silk Road and all of those stories. And, for people who want to get AK-47s illegally and all of this tarnished reputation to being sanitized and accepted and actually evangelized by the like of BlackRock. And I saw this coming. And the Bitcoiners have generally gone, yay, it pumps my bags, I'm happy. So any criminal. But what they don't realize is that the bullion and the metals guys have seen this movie before. Very, very clearly in terms of what goes down. And silver is one of the biggest victims of it. But derivatives and creating, and Larry Fink even talks of ETFing this as if it's now a verb. And this, unfortunately, you'll know of the ETF of silver. People that want to own silver end up giving all their power and proxydom. It's like being a shareholder, but you give all your power and your voting rights to this asset manager that can, decide that you need a DEI, an ESG agenda, you need to do all of these things that are actually counterproductive, bad for business. And in the case of Germany, very bad for business. We'll get onto that, I'm sure. But all sorts of various misnomers and cultural Marxism that they've chosen to escalate. So BlackRock's presence, to answer your question, is a very bad thing generally. And while they'll pump the bags for now to make it attractive and to get everybody into this, they are aware that essentially people are realizing more and more that we are in a debt and fiat-based collapse. We were the first of anyone, any degree of influencer to say in 2020, the debt market has turned. This year, you've had Paul Tudor Jones, Druckenmiller, and even Zero Hedge have run articles in this year, 3 to 4 years after we stated it, that the bond market has turned. So they probably talk about their trades in retrospect. So they might have been a year ago. We were shorting TLT in 2020 in the ETF and took a massive, massive run on that. The debt markets have turned, and it's the most important thing everybody should understand. But debt markets aren't NVIDIA. It's not a story that people can understand as much. And that's why they're not getting it. It's the beginning of the end, because both the associated fiat, they have a twin, the fiat and the debt, money is borrowed into existence, are going into stark devaluation. And one of the questions I know you were going to ask is actually, we've had rate cuts. You've had a double rate cut, and then more recently a single rate cut, but you've seen the US 10-year actually move up. Why? Because the debt needs devaluing. And how do you devalue it? You push the rate higher, or you have it forced on you because everybody thinks the central bank is the last and the final arbitrator of interest rates. Well, in actual fact, the market is, and people aren't buying losing assets at overinflated prices that are paying a sub-inflation yield. And the outlook for many people slowly realizing that inflation comes in many waves, and we've just had the first wave, and the first wave is never the biggest wave. So our outlook since 2020 has been for generally higher interest rates with pullback periods like now, but they're going to be less satisfying, less deep, and less long, and further future highs. So this is an interest rate spike environment, which is how Volcker actually managed down the Vietnam debt when the French started calling for their gold in 71 on the war that started from 64 to 74. And that led to a major gold bull. And gold was the sole asset that was the inflation, stagflation beneficial. That was the thing that went up in an environment where many things went sideways and in real terms down for an extended period for equities, property, housing, jobs, market economy, stagnation. Gold was the sole thing to go up. Now we have this rival to gold that's been pitched as a rival. So that's the thing with Peter Schiff and the Bitcoiners. They pitched as a rival, but actually they both are indicators for failure of the debt system. However, I trust Bitcoin less because I'm not interested in the digitization. I trade it and I will short-term invest and hold to make money out of it. But if I'm having a long-term holding, I want something that is under my jurisdiction. And Larry Fink, it's a long-form answer and I apologize, but I want to add this key point. That's very important, Jesse. Larry Fink is an aggressive driver. The thing that gets him most excited about blockchain is not the individual token like Bitcoin, but it's the tokenization of assets, real world assets being put on tokens, NFTs, etc., etc. And that's how they will achieve actually stripping you eventually of all your assets. You'll be obliged, valuations, licensing, taxation will all take place in the blockchain. You'll be forced to register your assets on the blockchain. You'll have an NFT for it, and then they can then assess who owns what and how much you have, right down to your home. And then with the right amount of fundamentals and printing of tokens, they can actually create economic environments, tax you out of those assets, make you forced sellers, and turn you into tenants in your own property, on your own motor vehicle, on your own bicycle, potentially one day. It will become a rental environment. And just so that you know, the stock market has overvalued subscription model over purchase model. Microsoft Word, you used to be able to buy it, now you rent it in the cloud. All equities get far higher valuations if they get you to rental. So this is a corporate fascism along with a totalitarianism and suppression of the individual citizen. So, you know, there's quite a lot for you to unpack in that, but that's the direction we've been taken in and how I frame my Bitcoin and gold, my gold views.
Very interesting. I want to dive deeper into the Fed cutting rates and actually Treasury yields on the 2, 10, and 30-year going up. I think there's a thought out there that the Fed and central banks around the world control Treasury interest rates, that when they start cutting rates, that then Treasury yields go down. This time they've gone up. What's going on there? Is the Fed failing in its stated mission of keeping inflation under control? Why the 50 basis point cut? What are you seeing when you look at the actions of the Federal Reserve?
I'm seeing a private corporation that is doing its damnedest to ensure the collapse. This is a controlled demolition of intent of the US and Western economies. So as for Germany, as for America, they are takedowns. These are takedown events. In terms of the actual interest rates, we, funny enough, are of the view that you're not very far away from a disinflationary event. In other words, the US 10-year is probably at a localized high, and we do expect it eventually to have a down leg. This is something that's best explained with a chart, if you're open to me sharing a visual to illustrate what we expect. But you are in a falling wedge on the US 10-year, and I'm going to ask for a share here, and I will share this image with you, and it'll help bring a little bit of focus. You can see this has been a very lengthy move up from here, even though there were cuts. But we do anticipate that this is still a structure that is in this kind of format. So what's going to then cause eventually the rates to start coming down? It's not too far away from happening, is our view. And at the same time, we were excited about a Euro Swiss franc short, which is the Swiss banks and the Swiss currency are typically where Europeans choose to run. They're not so mad about dollars and America. and they'll go local. It's closer to them. It's kind of like an American would rather go to Mexico on holiday or do something than he's going to go the halfway around the world. And unlike Mexico, the Swiss is almost a hybridized, higher quality, less toxified currency and environment, and very high net worth, high living stand nation. So they'll probably be selling their euros for some reason. So I'm anticipating a euro-based crisis, which could be around euro banks. The German banks are wrecked. Of course, you probably heard of VW closing plants for the first time ever on German soil. That's going to lead to a lot of retrenchments. They've got everything wrong in terms of the energy. And again, it's intent. No sane business person would have done that and not taken the cheaper gas from Germany instead of paying for more expensive gas to be boated over from Houston, from America, and buying coal from South Africa, which they've also done, whilst being supposedly the greenest party of them all and really sucking the Kool-Aid on that ESG environment. So Germany is in real trouble, and Germany has been the spinal column that all the fat weight could hang off in Europe. You know, it supported and sustained the pigs, the Portugal, Greece, you know, Cyprus, Italy, etc., when we had the original euro crisis, which we were also calling the euro Swiss franc short. The funny thing is, the longer I'm trading the markets, I'm coming back to old trades again. It's turning into almost a redux, and we called it twice. Once when it was 150, way up there, and it was a huge spill that saw the euro Swiss franc trade below parity. And nowadays, we also called the peg fail, which was a similar reassertion when the Swiss franc walked after Draghi said whatever it takes. And he killed the euro by quantitative easing in the post dramas of the subprime. So Europe's in trouble, and America is similarly in trouble. And the 10-year that I'm showing you here is more American aspect, but I'm expecting some news that's going to see a run into bonds again. Never buy debt, but for a short spell, traders may make some profits on the long side, but I expect some pullback either here and possibly there. But in the longer term, we break out this side of the structure, Jesse, and that means higher rates. So there could be a little bit of fear about to come in, and I don't expect that to be particularly good for any risk on assets. That could slow Bitcoin's progress before getting to 100K. You mentioned it's through the 90K now. And gold's already having an initial run. And there's another market that we are in that we persistently said we're short and bearish on, and that is oil. And that means we've got such wrecked consumers. So in the subprime in 2006 and 7, we had super high oil. That was the one time we had almost $150 oil because everyone could afford it. All their houses were going up in value. So oil serves as a sort of skimming device for the like of the big world, the Bilderberg groupers. When you're super rich, the price goes up and they skim a lot. But when they've overkilled you and you're in a deep recession, that's something that comes down a great deal. So I think of it as an additional tax that is universally controlled as energy, your cost for energy, for travel, buying on Amazon, delivery, all of these things. Oil is a massive part of all of those things. And you saw in the events of CV19 how hard it's crashed. So the oil market is also looking very off to me, and we see 32. So I'll bring that chart up, seeing as I've got you dragged into the abyss of my charting world. But let's pull that in, US oil. So actually in an environment where we've been very bullish gold, we're actually been bearish oil. It's been short oil, go long gold environment that we've given people for the last 6 months. And this is what oil has done. And I just want to highlight this structure here to you like that. You have broken down out of this. You did get quite a lengthy pullback move, but you are looking weak, and we expect that 65 level to break. And that is part of a right shoulder on an even bigger structure that could see you trade right down to 32, but at least even on this pattern alone, below 52. And that's a wrecked consumer. That's less travel, that's less business flights, airlines suffering a bit, economic activity generally, purchasing. I think it's going to be a dull Christmas in terms of retail and consumer. I think they've been more wrecked than you think. And I think the labor market is, and I've always biased, is worse than you think. And we've been validated on these house views that we've had over the last 3 years. You saw there was an 818,000 re-rating on the liar number that is referred to as non-farm payrolls. That just simply didn't happen. I think that you're not getting the full story. Consumer wrecked, lots of people, high debt, credit cards, high rates, interest rates, new buyers on property in the US markets, 7% fixed for a 30-year. So how do you buy houses that other people have purchased when they've been financed at 2, 3, 4% at 7% now? They're not going to get their prices. There's too many things. Markets priced for perfection. The stock market, the housing market in the US, too bad at an employment environment. And I see a disinflationary event. And I think oil and the European half of that argument, the euro, Swiss franc, are both illustrating that.
Well, while I've got you on the charts, why don't you bring up silver and walk us through what you're seeing there? Because it touched $35 an ounce for a little while before dropping down now to just above 30. Of course, the cries of manipulation are out there at this point in time. What are you seeing when you look at the silver market? And how much do you think manipulation of the market through paper contracts actually has an impact on the price?
I'm going to jump your gun. I'll show you the silver in a minute, but this is such an important chart to understand silver. And this is the gold-silver ratio. So in answering the question surrounding gold and silver, this particular structure tells me that we aren't done. Gold is the first and foremost hold. We handle this in our newsletter about how this is going to be a 15-year process. We're not overnight. It's not December that everything crashes, all the markets crash, and a month later they issue a CBDC and all of these new things, and everybody's properties are suddenly registered on the stock market, on the blockchain with NFTs. As you can well understand, you don't pull all those tricks out of a hat in one month, 1 year. This is a decade and a half process, I think, that we're going through, and Blackrock's going to be at the center of it. And overall, gold is in this pattern here. I've done it with the red line, and the red line indicates the line I most expect to see broken now. And we are holding in the upper half of this, and until silver is strong enough that it breaks either this lower line that I'm doubling up, or gets through the 75 level and starts heading down to 65, I don't feel meaningfully that silver is ready to start that overperformance period. And everybody in their investing is a little bit too excited and starts skipping steps and wants to get straight to home base. You've got to take your date out to dinner first and have a good, chat and engage and be personable and be likable. You just don't jump into a lap at the first, dance. And this is essentially where you're at here in the metals markets. Gold is king. We do diagrams to illustrate that. As I say, gold is the king and it moves first. And I show that's because sometimes when I talk about these anti-fiats, people don't understand. This is a diagram that we do on our newsletter. It's totally free. You can grab it and jump on. King is gold, and it started moving first. And I'll show you this on the chart. King of the cryptos is Bitcoin. In the same way, many people are chasing into their favorite alts, and it's not doing as much as Bitcoin. In some cases it is. It's not universally true, but we're going to go king, jack, and miners, like that. Obviously, the big miners started moving a little bit, but when we're talking miners, I'm talking small and medium cap size. And in the same way, crypto starts. So it's like an engine. When you fire it up, the cylinders go in a firing order. And you've got to position early and you've got to stay there. You'll get your chance to pivot your gold, in some of it into silver. Of course, there's the risk of unobtainium when we're talking physical, but be in gold and then Bitcoin. These are the ones you want to do. Then as the alt run starts taking place in crypto, you start pivoting into, and we have a certain set that we think are particularly well set up, and the same in gold. And just to illustrate that, who runs first, We did the technicals. These are the charts. What you're looking at here is the gold chart and the Bitcoin chart. When we did this, that was November, 1st of November, the very first day. And you'll see you got the continuation set up. They're different time frames. And in the same way, you got the continuation set up in Bitcoin. This was then the ETF bull leg. This was the whole run up to 2021. We then went sideways in a broadening structure for an extended period, and so did Bitcoin. Different time frames. This is a 5-dayer, this is a 3-week chart. But when gold broke and set up a nice little HVF, we said you want to be aggressively long gold, and that's been the right call. Then Bitcoin broke, and we did it on the Crypto Sniper. We said Bitcoin, and this is now 3 weeks old, to start eating gold's headlines, to take gold's headlines away from it. And that's exactly what's happened. In fact, gold has pulled back quite considerably, and Bitcoin has run. So it's being put in front of gold as the first on-ramp for all that anti-fiat and debt money. And it's hoovering a little bit of gold's love away at the moment, because now the pro-Bitcoin president is in. So you're getting all of that cash going into the Blackrock ETF and other things. But you can see who's lagging and who moved first. You see, this was 1st of November Bitcoin. It's only really just begun its journey on a breakout out of there. By the way, those targets are 145, 147 before meaningful rest. Gold was almost at its 2,800 target. So it slows up a little bit as it's coming close to the boundaries of, people start thinking of 3K once you get through the 2.8s and you're in the 2.9s range. So there's always a little bit of a balk. 1927 balked at the 2K, didn't want it. It had run the 1,000. We'd waited a long time before the 2K fell. So there'll probably be, the smart people still know that gold is the canary in the gold mine for central banking malfeasance. And that's the world we live in.
Well, let's talk about a Trump presidency and what it means for markets, the economy, and society at large. Does this put any stops in the Davos plan? Because obviously he's come out the gates swinging, he's got Elon Musk and RFK. He's talking about free speech and how important it is. He's talking about bringing the organizations like the CIA and FBI kind of to heel and getting rid of all the bad actors there. Is this all a distraction from the truth? Is Trump really going to come in and drain the swamp and change things for the better? Or is he just another puppet dancing to the tune of the Davos crowd?
He's another puppet. And in terms of draining the swamp, all the hires he's made is hiring the swamp, if you go look at their position. But what happens is they hire a different theme of swamp. So they advance different agendas under the stylized differences. Don't get me wrong, just because I'm saying, sorry guys, I'm raining on your parade on Trump, doesn't make me a supporter of the alternative either. She was more repugnant. They were more repugnant. They advanced the cultural Marxism, the transgenderism and all of this, which is offensive, and many other causes that have been advanced. The different things get advanced under Trump. Don't forget he's backed by Peter Thiel, a very shadowy guy, who is part of, listen, if you're in PayPal, that's the CIA. Nobody gets to move money around and dark state. Any major payment systems that got as proliferated as that is dark state. Same for Bitcoin. There'll be people that argue on that. I'm sorry. When it comes to the big issues, those things are prepped. In return, nobody gets their own money. You will never have your own money system. It's as simple as that on any scale. You can have 4 of you and your neighbor, and you can swatch tokens for milk and what you grow. Okay, that you might get away with that for a few years. On any meaningful scale, they will never allow you your own money system, because the system of power and control is entirely bent on them controlling the money system. And they are in a policy of continual inflation, and near the end, it's an escalation and a parabola of inflation, which means an escalation in loss of value of debt and fiat buying power. And this is what gold has begun showing to everybody, and it's the one thing you can physically hold. But mark my words, if this is a synchronized global thing, and if you think just holding the gold is going to be good enough, believe you me, they're going to want you to register it, put it on the blockchain, and you're going to have a choice to make as to whether you do that. Otherwise, it will become black gold that only smugglers and people who want to buy AK-47 and who sell heroin on the internet do, and you can revert all the tarnishing that media did on Bitcoin originally. Bitcoin is like open source banking in terms of it. People have got certain apps. You'll be shocked when you receive a crypto payment. If you put those wallets in, it can even generate a score for you as to how and what transactions this has come, where's it come from, how many times it's been transacted. It's not fungible like a £10 note, a $10 note, or a coin that no one tells you that, 3 people ago somebody snorted cocaine with that note, or anything like that. It has zero bearing on its fungibility to you when you're buying your loaf of bread in the supermarket. So, I'm a bit of a doomsday prophet in terms of that, not for the kicks and trying to grim everybody out. It is who it is. Though at the top level, there's an entire level that is permanent government, and that has a lot to do with intelligence services. And, there's a lot of things that are preordained and are planned. And this is just a political flavor that has changed so that you keep hoping in democracy. Look, we voted ourselves some freedom. Well, good luck with that. Last time Trump was in, you had record pace, experimental medical intervention to deal with that has now led to increased morbidity across all age groups and has included children. That was absolutely criminal. You listen to the Japanese, what they say. I know you have some ties there who speak quite a bit of truth about the extent and the damage of that. That was his last bequest to you as people. And a lot of people got very rich on that. And a lot of people that are small people in their eyes got very dead out of all of that. And I encourage people to remember that.
Yeah, some very good points there. Let's pivot to the collapse of the German government. There's now word going around that they don't have enough paper to print ballots to hold an election. That's then being countered by some of the major paper producers in Germany saying, hey, we got plenty of paper. What are you talking about? Poland even stepping in and saying, we'll sell you paper. It seems to be an excuse to stall this election process. What are your thoughts on what's going down in Germany right now?
It's certainly become a fulcrum of accelerated intentional collapse. And as I mentioned already, it's the spinal column of the euro. It's for the industry that exists in Germany that the debt of Greece, Spain, and Italy was allowed to be the issues that came out of the euro crisis were allowed to be backstopped. They were the buck stops here, the might of industry, the world buying Mercedes and BMW and Volkswagens and many other German products outside of automobiles. What's actually happened is they've socialized, which is socialism, which is basically a gateway drug to communism, so much. They've taken in so many immigrants, and Germans are in a state of collapse, and they've now got a government which is the ultimate inversion of business common practice and sense, which is designed to complete nobbling them, which in turn will nobble Europe, which is why I see a euro crisis coming if we don't have a macro American-based crisis before. So there's so many plates all slowly ceasing to turn that are ready to drop. And the spinner has stopped spinning. You've handed it to the clowns, and they don't realize they've got to keep the stick spinning to keep the plate spinning. And there's a lot of plates ready to drop. And that needs bearing in mind for the Bitcoin guys that are getting over-elated. Because if we have a demand-destroying event in a major collapse and banks go down, things go dark, it's going to be an escalation. Each crisis, this is an important point, the engineering level of each crisis, the scale of which has got ever bigger. You think of the dot-com crash. So just for modern memory, there's many viewers who will be, not able to deal with 1987 and all of that. Go from the dot-com crash to the subprime crash to the events of CV19, which actually involved shutting down every small business, stymieing travel, policemen locking up grannies in parks, all of that nonsense. What have they got planned next? The only thing I can tell you is it gets bigger and it's more extreme and it's more widespread. And they're sinking their teeth into it. And so I think all the fulcrums of real resourcefulness are being destroyed. And it's the ultimate vengeance on Germany for, the world wars. Lots of different narratives you can choose to believe out of what came out of that, but in destroying it for what they were, which was super industrious, smart, great engineers, great designers, good workers, and they've inverted that now with diabolical tax policies, ridiculous energy policies that have actually seen them lose the cheap supply of in Russia, and seeing their now prime industries being nobbled with ridiculous costs and being, this is the way it goes. This is what we decided to do. Let's put holes in our ship. Let's see how it works like that. So it is a controlled demolition for me, and it doesn't get better, and it has to play out, and the damage will be immense. And the knock-on effects on the associated European nations and those in the Euro are going to be brutal. And Britain is not too far behind.
Great thoughts, Francis. It's always an awesome time whenever I get together with you for a conversation. For those who want to hear more from you, tell us about the marketsniper.com, the cryptosniper.com, and anywhere else you want to direct people online.
Yes, I suppose our raison d'etre, my primary reason is, people, you have never experienced a set of economic contagion and circumstances ever. And in 400, 500 years' time, they will still be talking as case history, the events of 2025. And that's where we are, that quarter century. And all the old historical advice of 60-40, buy bonds, have bonds, all of that, none of that applies and doesn't serve you. All those guys, those IFAs that are regulated and done exams and all of that, they've learned what worked inside a small cycle. This is end of cycle time. It is collapse and contagion. It is going to be social unrest. There's lots of social things you need to do. We refer to it as the reset. Amazingly, the World Economic Forum started using that. It's in our branding. We've had it far longer than them. So they're even stealing our phrases. I say stealing, they don't know who we are. But I mean, they're coming and squatting with their tanks on our lawn. We've seen this coming for an extended period. There are lots of highly valuable things you can do. And in actual fact, it's a polarization of wealth. And most people are going to be reduced to very near serfdom and reliant on UBI and government remit. And we wish to keep you out of that. If that's something that makes sense to you and you used to non-standard guidance and non-standard investment, utilizing the Hunt Volatility Funnel method, that's what we specialize. And if you go to our YouTube channel, there's a free course. Go and grab that just with an email. It costs absolutely nothing. See what we're all about, how we utilize the method. Watch and subscribe on the channel, both the Market Sniper and the Crypto Sniper, because we cover both markets. We recognize their role. And if any of that resonates with you, you can book a call to join us. But it's a community of the willing. We have very high quality people that are in there that recognize all these things. And we run our own platforms to do this. So we're not on any of the WhatsApp groups or Discord or anything like that, for personal privacy and security. And we look forward to helping. And even if those that don't come on, I'm here to tell you there's things you can do. Take action, follow the channel. It's free. And we hope to lift you all up and run this obstacle course together to ensure that you survive these events, because events are afoot, but they will be coming, and it's a decade and a half long. It's going to be the chapter of your life, one of the big chapters, and it could define who you are. If you really negotiate it well, you could be a leader amongst men and seize that opportunity, but it won't be easy. Thanks for having me on, Jesse.
Well, links will be in the description below. Thank you so much, Francis, for coming on and sharing your knowledge with the audience.
Absolute pleasure. Thanks again.